Hello, my name is Glenn Gow. I'm the marketing partner at Clear Ventures. Part of my charter is to examine the business opportunities that are being created by the blockchain. Today, I want to share my findings with you. Thank you for joining. So, let's first talk about why we're really here. Ultimately, it's because almost everyone has seen what's happened to the value of Bitcoin. The consequence is that a lot of people have made a lot of money in a short period of time of Bitcoin, and that's really garnered our attention. That's why we're here. We want to understand what's really going on. Here's something to think about. Here the son is asking the dad for his allowance in Bitcoin. Don't be surprised if this happens to you before too long. Today, I will touch briefly on cryptocurrencies, the underlying technologies, ICOs, and venture capital as it helps set the stage. And the main purpose of this meetup, this discussion, is to talk about business opportunities created by the blockchain. So let's jump right in. If we look at money or currency, it really has value only because we believe it has value. Fiat currency is declared by a government to be legal tender, such as the dollar. Digital currency is ones and zeros. It's non-physical. There are no banknotes or coins that physically exist. And cryptocurrency is digital currency that is protected through cryptography. And one of the things that a cryptocurrency does, Bitcoin in particular, is it protects against something called the double spend problem. So if you imagine I have a dollar bill and I hand it to Mary, I cannot take another equal dollar bill out of my pocket, the same dollar bill, and give it to Bob. You could do that with some earlier digital currencies. You could spend it twice. Cryptocurrency, one of the things it does is solves that double spend problem. I can only spend it once. So what is this Bitcoin thing? The simplest way to think about it is it's the granddaddy of all cryptocurrencies. It started with a white paper, became a real thing shortly after that, and slowly started to take off. So this white paper solved some critical math problems. It was proposed to be a new way to transact on the internet that was safer than anything else. In fact, it was designed so that untrusted parties could work with each other without a middleman. When you think about a ledger, or rather the keeping track of transactions, most things are done on a centralized ledger. Bitcoin is done on a distributed ledger. What this means is it's really a database keeping track of transactions. It's a shared database across a network, and there is no central administrator or central data storage. The blockchain, and this is as technical as I'll get today on the blockchain, the underlying technology that makes this work is called the blockchain. Think of the blockchain as a mechanism to transact between two people or two companies and record that transaction so it's protected from hacking. Every record of every transaction is connected into a chain, and every blockchain is replicated on every computer on that network. So let's use an example. Here we have Alice, who wants to send some money to Bob. She gets on her computer or her phone, and she creates a transaction, and that first block, looking at number 2, is created. It's online. It represents the transaction. That block is sent out to the network, in this case, the Bitcoin network. And computers look at that block and compete with each other to approve that transaction and validate it. Once it's validated, it gets appended, looking at number 5, appended to all the other transactions that came before that. So now we have a permanent, non-repudiable, and transparent record of the transaction. Ultimately, Bob receives his money from Alice, and everyone is happy. One of the key factors to consider about the blockchain is that this is a peer-to-peer communication. It's one-to-one. In our previous example, it's Alice to Bob. It could be a company to a company, but there is no intermediary. Keep that in mind as we talk about this some more. Let's use a real-world example. Have you ever had to wait in line like this to transfer money overseas? It's a real pain. So let's go back to Alice and Bob. So let's say Alice is a mother who lives in New York who wants to send money to her son, Bob, who's studying in the UK. She goes and waits in line like this every month as she earns enough to send to him. It can cost Alice 15 to 25% of her money to make the transaction. It takes a lot of time. It will take several days for that transaction to move from the United States over to the UK. And Bob, who's waiting for his money, never knows exactly when it's going to arrive. It's not a very efficient process. So here we have a company called Abra that is solving this problem. This is a real application in use today using Bitcoin and something called the blockchain technology. Now, Alice in New York can put money into her Abra account, and she doesn't even know it, but Abra converts her dollars into Bitcoin. The Bitcoin transaction occurs in seconds, so Bob in the UK can pull up his Abra application and receive money. It gets translated from Bitcoin into the euro, and Bob gets his money in seconds. It eliminates the middleman, it eliminates a lot of the costs, and it eliminates a lot of the slowness in the transaction. This is a great example to consider when you think about what the blockchain can do. Let me make a few comments about Ethereum. It's a very important development in the world of the blockchain. One of the things that makes it different from the blockchain, from Bitcoin, is that Ethereum is highly programmable. It's designed to accommodate the construction of complex applications that may include something called smart contracts, and it has the capacity to run decentralized applications, sometimes called dApps. Ethereum itself has gone through quite a bubble recently, and we don't know where it's going to go. But people have noticed the power of what one can do on Ethereum and have paid a lot of attention to it, and its price has gone way, way up. One quick note about a smart contract that is available now on Ethereum is that a smart contract can help exchange anything of value: money, property, shares, in a transparent, conflict way, avoiding the services of a middleman. And it's all done through code. So in this example, we have an issuer who's trying to provide something to an investor and has to go through many middlemen. With a smart contract embedded in the code itself becomes the contract, and no middleman is needed. The issuer can directly provide that information or that thing of value to the investor. One other thing to really keep in mind as it relates to cryptocurrencies is that there are over, at this point in time, 1,100 cryptocurrencies, most of which you will never hear about. Bitcoin and Ethereum are two of the most important ones, and there are a lot more that are competing for your attention and your dollars. Speaking of that, let's talk a little bit about ICOs and the world of venture capital as it relates to what's happening in this world. The ICO world is a little bit crazy. In this example, we have somebody who doesn't even know what an ICO is, but wants to invest. This is a very common scenario right now. People who don't understand are pouring money into ICOs. And why? Well, because it seems to be working right now. This is how much money at the end of July. This is actually an old chart. I couldn't find a newer one. At the end of July, $1.8 billion had gone into ICOs by just about anybody who wanted to invest. And most of these ICOs are increasing in value. So people have, in fact, made a lot of money if they're with the project or if they put their money in as an investor. So this has garnered a tremendous amount of attention. Let's talk about what ICOs are, though, just so you have a sense for why they're so important. Think of them as a mix of a Kickstarter campaign and crowdfunding. A company, sometimes called a project because it may not even be a company, issues tokens or coins. And these, let's call them tokens, are things that you buy that may or may not have any real value. What they are things that represent potential value in the company. They're not shares in the company. Let's keep that clear. They're something else that may or may not have value in the future, depending on whether or not people want to trade them and whether they want to use them inside the software that's being built by this company. But if you have a coin or a token that you've purchased from a company, you have no rights in that company as a shareholder because you're not a shareholder. You just own some of the tokens. Right now, ICOs are a threat to fiat currencies. They were banned in China very recently. They were banned in South Korea very recently. The SEC has announced that they will regulate certain kinds of ICOs. We have warnings from Russia, from Canada, from Singapore about ICOs. It's unclear what's really going to happen in the world of ICOs. For a minute, I'm going to talk about the good, the bad, and the ugly around ICOs. One of the good things about ICOs is that there is no lockup period, which means that anyone who invests can immediately sell. That's not generally true for early investors of shares in a company. But if you buy and participate in an ICO, you can often immediately transact and get out. Let me give you 3 examples of very interesting ICOs that have occurred recently. One is Omisago. The ICO occurred in 2017. The company is now worth over $1 billion. Quantum, on the bottom right, was also worth $1 billion when I started to develop this presentation. And then they crashed to about half of that and then rose 30% from there. Quantum barely has a product out the door, if they actually have one, and yet they're worth somewhere north of $500 million already. And clearly, it's a highly variable cost or price of their token. And so there's tremendous risk associated with all of these. Filecoin is a very interesting example, and in that they raised $257 million in their ICO. Filecoin doesn't have a product. In fact, they have said, we may have a product in about a year or so. One of the key things about Filecoin is that it was open, the ICO was open only to accredited investors, and many of the early investors were venture capitalists or venture capital firms that put money in to the pre-sale of the ICO. So I believe that one of the reasons why it was the most successful ICO to date is it had a substantial backing, which helped the believability of the offering. Let's use about a great example here I want to share with you is Kik, in the way that this is really changing the way to think about investments. So Kik is a chat or communication platform. The company is headquartered in Canada. It's worth over $1 billion. But if I had to guess, this 7-year-old company probably isn't very profitable and is probably concerned that it will never be able to go public. So what Kik did, I think, was quite brilliant. They actually changed their business model. A 7-year-old company changed their business model to take advantage of this ICO market. And the way they did that is they said, well, we have people communicating with each other back and forth on our platform. Why don't we give them something that's the equivalent of loyalty or participation points? But we're actually going to create tokens for that. And Kik was able to raise $100 million this month, September, in an ICO, just by changing their business model and doing something that they might have done anyway. But they created value in the tokens that people can earn by participating on Kik. They did this without regulatory scrutiny, which I think was the key factor here. Interestingly enough, they couldn't sell their tokens to citizens of Canada, but they could everywhere else. Let's talk about the bad and the ugly. As I mentioned, there is no regulatory scrutiny outside of many countries. And employees of an ICO company have taken the money and run. One example is OneCoin. See, what's interesting is that if you participate in an ICO, there is no fiduciary responsibility in that raise of money. The owners of the company who receive a lot of value in that ICO don't have an obligation to give you your money back if they don't continue the company. And OneCoin did exactly that. So all that money is gone. And most ICOs happen before a product exists. It's just a white paper. So it's very difficult to evaluate whether or not something is going to eventually be of great value. And yet people continue to throw money at ICOs. ICOs also, the coin you get may never be tradable. So it may start out nicely, it may increase in value, but there might not be people who eventually want to buy from you. There may not be an exchange that picks it up that makes it easy for you to find other buyers. So tremendous risk to keep in mind as it relates to ICOs. On the venture capital side, if we think about blockchain companies, many well-known venture capital firms have invested in blockchain companies. One interesting thing to note is that most investors in blockchain companies are outside of the United States. This is a theme that you will see as it relates to blockchain, as it relates to cryptocurrency, that developers are all over the world, people investing are all over the world, exchanges are all over the world. This is not a Silicon Valley phenomenon. This is a global phenomenon. And let me talk just for a moment about how venture capitalists work with blockchain companies and companies related to the blockchain. So in this example, on the bottom right, if we think of a traditional startup, there will still be many. The vast majority of startups will be non-blockchain, will be traditional, and venture capitalists will continue to invest in those companies. Venture capitalists will invest in blockchain companies. If you look at the middle, as I showed you on the previous slide, there will be a lot more companies coming out that are using blockchain as a foundational technology. And companies will, venture capitalists will continue to invest in blockchain companies as they emerge. And finally, as in the example of Filecoin, venture capitalists will invest in companies that have as one of their mechanisms for raising money an ICO in their plan. Because the backing of a venture capitalist helps any outside investor truly understand whether or not this company is going to be of value over time. And there's a great deal of value for companies to continue to work with venture capitalists even if an ICO is in their future. Now let's talk about the business opportunities that are afforded by the blockchain. The first thing you want to understand is that this is really a big opportunity. Almost everybody who talks about what's happening in the world of the blockchain says this is just like the early days of the internet, back when eBay and Google and Amazon were young companies. No one knew that they were going to become as big and as powerful as they are today. Well, we're going to see similar things happening here. While a lot of companies will fail, which is very common, there will be companies that become very significant. And Goldman Sachs in 2015 was looking at this and said the blockchain can change, well, everything, not just financial services. So let's talk about some of those examples. Here's a funny example. This comes from the homepage of a company called Arcade City. And Arcade is, you might call them the non-Uber. And the idea here is to cut out the middleman. So if you have an application on your phone that's Arcade City, you might be a potential driver. And if someone else has the application on their phone, they might be a potential rider. And by cutting out the middleman, what Arcade City does is they are making it more profitable for the driver and making it cheaper for the rider. And here, I love their little humor here where they have the former CEO of Uber is pretending, they have him pretending to be a driver on their platform. But ultimately here, the driver wins and the rider wins because there is no company in the middle taking 20% of the transaction. Here's another example. It turns out it's pretty difficult to get insurance for most things. You have to go through a process and fill out a lot of forms and have somebody evaluate everything about the particular issue that you're trying to insure. But with the blockchain, you can enable micro-insurance. So let's imagine that you are going to fly from Shanghai to San Francisco, but you're actually concerned you're going to miss the flight because you have a lot of things going on. You're not sure you're going to get to all the previous cities you need to get to in time to make that ultimate flight from Shanghai to San Francisco. And I'm willing, let's say I am willing to provide you some insurance. I'm willing to place a bet that you are going to make the flight, and I'm going to let you pay me some money for that insurance because I'm pretty sure you are going to make the flight. And there are many, many different kinds of insurance that one might create without insurance companies through using the blockchain. Here's a great example. Distributed computing. So Golem has created this concept of what they call the worldwide supercomputer. So billions of computers sit idle a great percentage of the time. And Golem believes that they can create an application that enables someone who needs supercomputing power to split up that transaction into thousands or maybe even millions of different computers and grab access to those CPUs that are not being utilized. And if you were the owner of one of those computers that wasn't being utilized, you would get paid a little bit in the Golem token. And whoever would be running that massive transaction would pay you through Golem. So it's a very interesting concept. How do you take advantage of all this unused computing power and yet create a worldwide supercomputer from it? Identity management is a really big issue if you think about how often you are involved in identity management and how not efficient it really is. So you have legally binding digital signatures to think about, passports, licenses, security passes, key cards, logins, ownership documentation, voter registration, and on and on and on. What if that could all exist in one place? And what if you could just provide the information that's absolutely required as opposed to other personal information? A simple example would be a young person could prove that he or she is old enough to purchase liquor without revealing everything else about themselves on their driver's license. So they could prove their age, but they don't have to necessarily share that they're an organ donor, for example. That should be private to them because whoever's selling the liquor only needs to know that they are in fact of age. If you think about electronic medical records, one of the things that's really interesting is that yes, this information is digitized. Yes, there's a lot of important information, but it's not shared amongst doctors and hospitals. So imagine you're on vacation and you get into a terrible car accident, you're unconscious, you're in the ambulance, and they take you to a hospital. When you roll into that emergency room at probably the most important time of your life as it relates to survival, that hospital knows nothing about you. They don't know that you're allergic to certain medications. They don't know that you're taking certain medications that could have an effect on what they give to you now. They don't know that you've been treated for a heart attack in the past, and anything they do now could damage that. And yet, through the blockchain, you should be able to share that information, or that hospital should be able to receive the critical information about you when they need that. vehicle maintenance. IBM is working on this project, and I like a better phrase for this really should be the supply chain. So if you think about how many companies are involved in the supply chain for building a car, it's many, many, many. And if there is something wrong with one of the items in the supply chain, now you don't need to recall 1 million Toyota Camrys because of a faulty airbag. You just need to recall the 10,000 that actually received the airbag with the exact chip in it that is causing the problem. And it will save consumers a lot of money. It will save the airbag company a lot of money. It will save the auto manufacturer a lot of money because everyone will know exactly what's going on with that vehicle. Here's one of my favorite ones around how to protect and share digital assets. I'm going to use the example of music, but this could apply to any digital asset. In this example, the music artist Imogen Heap decided to share some of her music by using Ethereum by embedding a smart contract in her music. And the idea here is that if you are a DJ who likes to remix music, you can download Imogen Heap's music. You pay something for that. And now, if you remix the music and go make some money as a result of remixing that music, you share in any of the royalties that Imogen Heap receives from that music. You both win. And there's no record company in the middle trying to get more money out of the deal. It's just Imogen Heap and you as the DJ who make money out of this. Fascinating what you can potentially do with all sorts of digital assets. I have two more examples for you. The first is the mortgage industry, which is very paper intensive, and it's very hard to keep track of everything related to a house and a house sale. So just one example is that title insurance costs between $1,000 and $4,000, when really what title insurance is doing is making sure that all the paper that needs to have occurred in the past is in fact accurate to the home you're trying to buy. Well, that's clearly something that can be recorded on the blockchain and completely eliminate these concerns about titles and whether or not they're accurate to a particular property. And there are a lot of other elements like that within the mortgage industry that can be handled and greatly improve the efficiency and reduce the costs of what's happening in the mortgage industry. Last example for you, the Airbnb for everything. So let's imagine you're in your neighborhood and you have a lawnmower and one of your neighbors who just moves in doesn't have a lawnmower yet. Well, you only use your lawnmower very tiny percentage of the time. And if you have this app and your neighbor has this app, you can make a little bit money by renting out your lawnmower all on the app. And your neighbor comes over and picks it up, fills it up with gas, or fills it up on the way back. But they borrow it, and you made a little bit of money. Nobody's taking money out of the middle of that transaction. There's no Airbnb-like company trying to earn their 20%. And the reverse might be true. You might discover that a different neighbor happens to have a bicycle that they rarely use, but they want to keep. And you, using this app, can borrow that bicycle, pay them a little bit. They get a little bit of money, you get a little bit of money, everybody's happy. So what should you really do? First, educate yourself about blockchain technologies. There's a great deal to learn. Many of these issues are complex, and begin to learn about them. Assume that whatever industry you're in is going to be impacted. It's a rare industry that will not be impacted by the blockchain, if any. So make that assumption when you're thinking about how to run a company or how to participate more in your industry to be prepared for the changes that are happening and going to happen. Take a look at startup concepts. All these white papers out there are really often good ideas about what can be done. Well, what if you could do that also? Or what if you notice that a disruption is possible in your industry? It can help you prepare. Assign a person or a team to explore and experiment, or get involved yourself in some of these projects to understand how this works. And educate yourself more. This is like peeling a multi-layered onion. As you begin to understand it, you learn that there's more and more and more to learn. And it's fascinating. So thank you so much. My name is Glenn Gow. You can reach me through LinkedIn, through Twitter, or email me directly if you have any questions. It's been a pleasure speaking with you. Thanks again.